Ravi, interest rates globally have not peaked out. It could be 25, it could be 50, we can debate. But bottom line is that rates have not peaked out. And typically when rates have not peaked out, equity should not do well, growth stocks should not do well. But the reverse is happening. AI stocks, chip stocks, fintech stock, consumer stocks, they've all gone higher when interest rates are likely to go higher. So do you think we've got a reversal in, because that's what I've learned and understood over the years I've interacted with folks like you.
So the lead indicator towards all the data is pointing to inflation cooling down. In fact, inflation has cooled down, whether in India or whether globally also. Of course, the overall US economy still remains stronger. The jobs market still remains tight, and the consumer optimism is just about beginning to wane. So I believe that Fed is on the wrong side over here by extending the hike. They are essentially engineering a slowdown, because the economy is not slowing down on its own. So they will get what they want, which is a slowdown. But at the same time, a mild recession or a slowdown is actually a positive for a country like India, because we will be probably one of the few sole growth engines in the world. Even China, the post-COVID rebound in China is not that strong. And also the China plus one, whether it pans on the manufacturing side or no, but on the capital market side, it's already panning out, because funds are looking for an alternate markets to deploy their fund outside of China. And they are so badly burnt in the last 3-4 years that nobody wants to go back to China. So I think China plus one is playing out in the Indian equity markets, and inflation in India has peaked. RBI has paused. So from an Indian markets investor point of view, I think it's far more clear. From US markets point of view, we are not yet clear whether it's 25 or 50 bips, but one can very, very clearly say that after that 50 bips, I think we are done. So not trying to guess when it ends, but at the same time, how does that extra 50 bips matter? There will be pain in the US market for sure, whether it is in the regional bank it shows up or where it shows up, we don't know. Whether in the consumer spending it shows up, it will show up. And that is precisely why we are not bullish on the export-oriented sector.
Ravi, at what point in time markets will start getting worried about the next election cycle? I mean, it's a year away, but there would be a time when every second question or every second thought would be centered around that.
So I have a feeling that we are going to go strong into the election, because there is a high if you want to bet on the outcome of an election, which I don't recommend, and neither one should bet, but this is the time to bet on it, that election will be positively in favor of the current incumbent government. And at that point of time, probably even if the outcome was not in the favor, then maybe 2 months prior to that. But if it was in favor, then probably post the event is where you will likely see most profit booking.
And before we wrap, Ravi, what we've discussed are B2B businesses, manufacturing, solar. What about owning some of the B2C names, watch companies, car companies, pizza companies, liquor companies? I haven't heard that word from you.
So as I said, currently the discretionary consumption is undergoing a little bit of slowdown, and primarily urban consumption. I believe rural consumption is about to pick up, and urban consumption is also probably going to pick up 6-12 months down the line, when the current overstocking is out of the way. I think there was a pent-up demand post-COVID, and that led to a very, very high numbers. Now that is in the base, so we have to wait until that is out of the base, which will be 6, 9, 12 months down the line. Overall, if India's economy is going from $3.5 trillion to $5 trillion, for sure consumption has a big role to play. There will be a consumption J curve, which we have been waiting for since forever, is finally on the anvil, according to me. In the next 5-10 years, we will go from being a $2,500 per capita to $4,000 per capita. And if that were to happen, the kind of money that will come into discretionary spending, and we can already see, some of the sectors where supply has not been created, whether it is the airlines, hotels, that the kind of price increase is just crazy. So we will see this discretionary consumption boom showing up from time to time in various sectors, and it is a secular theme. Use the current slowdown in the space to build upon position.